$245,600 in extra interest just got added to your rental property, and your lender buried it in the closing disclosure 3 days before closing. You locked 3.5% 2 weeks ago. The docs now say 5.8%. That's not a rate change. That's a hidden fee called yield spread premium, and it's about to erase 40 to 60% of your year 1 rental income. If you're financing a $500K rental, difference between 3.5% and 5.8% cost you $682 extra per month, $8,184 annually, and $245,600 over the life of the loan. Most real estate investors don't catch this until it's too late to walk away. Here's what just happened. Your lender quoted you 3.5% to lock you in. They never mentioned yield spread premium in that pre-approval letter. Then, 3 days before closing, boom, closing disclosure page 2, line 801. There it is, a higher rate, an apology email, and a timeline too compressed to refinance or shop another lender. Let's break the trap. The wrong belief. A mortgage pre-approval locks your rate. If rates don't move, you close at the quoted number. That's how it should work, and that's what most borrowers assume. The reality. Pre-approval quotes often exclude or obscure yield spread premium, a lender rebate paid by the borrower in the form of a higher note rate. YSP isn't disclosed until the closing disclosure. Per CFPB TRID Rule 12 CFR 1026-38, a 230 basis point spread between approval quote and closing rate is systematically legal under FNMA/FHLMC selling guide sections that allow YSP disclosure up to the final 3 days. Federal Reserve data shows 30-year fixed rates averaged 6.4% in Q4 2024. Your lender quoted you 3.5%, a teaser rate that didn't include YSP cost. At closing, they add the premium, and your actual rate becomes 5.8%, still below market, but the borrower pays the gap in the form of higher monthly debt service. Why? Because lenders earn compensation 2 ways. Origination fees, 1-2% of loan value, and yield spread premium, 0.5% of loan value, depending on how much they want to boost their margin. They quote you the 3.5% to win your business, knowing they'll recapture that margin through YSP at closing. The delta, on a $500K rental property monthly payment at 3.5%, $245 monthly payment at 5.8%, $2,927 annual delta, $8,184 30-year total interest impact, $245,600. That $8,184 per year is 40 to 60% of the net rental income on a typical $500K property with 6 to 8% cap rates. Your cash-on-cash return just dropped from 8% to 2-4%. Now the phrase you must demand in writing before you sign anything: YSP capped at 0.5%/1%. Put it in your rate lock agreement. Make your lender initial it. Most won't, which tells you they're counting on that YSP margin. If they refuse to cap it, you've just seen their playbook. Walk. The exact line on the closing disclosure where YSP appears, page 2, line 801 under other costs. If your lender didn't itemize YSP on your pre-approval, it's hiding there on closing docs. Here's the 3-word phrase to say to your loan officer before you sign: show me YSP, not explain YSP. Show me, meaning the specific dollar amount and the percentage of loan value they're planning to capture through rate spread. If they say there is none, ask for it in writing. If they claim it'll be clear at closing, run. Research shows this pattern repeats across institutional lenders. Blackstone, Invitation Homes, and other large rental acquirers have wholesale lending teams that deploy YSP systematically on bulk deals. Individual investors rarely see it coming because pre-approval letters were never designed to be transparent about it. Here's your action. Before your next rental acquisition, request the rate lock agreement template from your lender. Add 1 sentence: YSP shall not exceed 0.5% of the original loan amount. Get that initialed. If they refuse, you've identified a lender that's planning to use YSP as a back-end margin grab. Your next call is to a mortgage broker who shops multiple lenders. One of them will cap YSP to win your business. Real estate rewards research. See you in the next deal.